Your life has options. Option trading education. Just like life, the stock market is full of options. Learn more today.
Hello again, this is Greg Tarpenning with Your Life Has Options. Finally getting around to reporting my June reports. Spent part of the last couple of months out of the country, so now it's time to get back to things. So just reporting on the month of June. We'll go through each of the issues that I'm holding. The first is Bank of America. I have 400 shares of that I own at $51.50. My price target for that is at $56. That's where I think it's approached fair market value and where I certainly look to exit out of that particular issue. Was able to sell the call at $53. Made $220 in premium. Was actually able to roll that one forward from the month before. I also had 200 shares assigned to me that I had in puts last month. But the total of that came to $206 in income, or 1% for the month. That's passable, so we'll keep that. The second one is Pennsylvania National that I've owned for some time. I have 300 shares of that. I own it at $211 a share. My target price for that would be the $241 that you can see there. I'm currently called at $225. It dropped below the $220 price that I had it struck at last month, so I could just do a simple resell of the call. Was able to set it at $225, a $5 increase in my strike price, made $807, 1.27% for the month. Next on my list is Pfizer, PFE. That would be my stock of regret. So I'm having to buy that down because I'm still not able to make the rate of return that I desire. Only made 0.36% return, so I wrote that down another 50 cents a share, so I can strike it out at a lower price until I can offload that at some point. Was able to make, with all of those things together, it paid a dividend this month, which for that is actually pretty good. But still negligible return on that particular issue. Next is Citi. That I was able to roll up. I still like Citi. I have a target price of that at $135 a share. I was struck out on it last month at $125. I've been trying to chase it up as everyone else has figured out it's a good place to be. I was able to sell or roll it forward up to $127. Still able to net $872 gain, 1.77%. So that's a fantastic roll forward and up, exactly how you would want it to work. It also paid a $240 dividend for the month, so that stock did very well. Made over $1,000 on that one issue for the month of June. Zions was assigned to me at $60 a share. This stock is a bit odd in that it historically has traded below what I would consider fair market value. You see on my target price, I have it at 80/65 because I can't figure this one out. By the math, it should be $80 a share. It just has never traded at that high of multiple. I don't know why. The historical multiple puts it at about $65 a share. Any rate, it was assigned to me at 60. I was able to immediately resell the call now that I owned it at $62.50, a $2.50 gain if all that should hold. Was able to make $334 or 1.42% return. Banks have been very kind to me for the last few months, but we've talked for the last few months that I anticipated that banks were significantly undervalued, and that's the play I've been running on. Next is U.S. Bank. I just was able to roll that forward, keeping it at the same strike price, but able to make an adequate level of return. I have it struck out at $56. I still think we're in a safe zone for that stock. Just wanted to continue holding it. Made 1.2% return. Let's see. Yeah, 1.2% return on that. So that seemed to make sense since it's still well above my target income amount. Ali is a new stock. It just got assigned to me. I ran puts on it at $45. Ali is in the auto lending business primarily. They're trying to branch out into other online banking in addition to that, but their bread and butter historically has been auto loans. Used to be GMIC. It's now renamed and rebranded as Ali, and so they can market to other companies that are non-GM. They're on a pretty strong expansion rate. Income is significantly rising. I don't see of the auto sales declining or default rates above their target. So I generally like that stock. And it's trading about 10 times earnings. I think that's an undervalued product. So I'm in that at $45. Struck it out at $45 and made 1.33% for the month. Works wonderful for me. TFC, my final issue that I currently own, have 300 shares of that. I own it at $47.50. I had it struck out last month at $50. I'm striking it again at $50 this month. It just finished below its $50 level, so I just kept it and reran it. Able to capture the dividend for the month on that one. TFC is a little complicated. I'm not sure I really like it. It's an optimal stock to be playing. It only has expiration dates once a month. So instead of weekly, like I tend to like to see, the strike prices are spread out at $250 per issue. So it's hard to roll forward either way because there's just too much air between the different strike prices. So not my favorite stock. I just got into it because it was, like a lot of other banks at the time, pretty significantly undervalued. I was able to make 0.93% on that, giving my total call premium return for the month 1.31. That's fantastic. As those of you following know, my target is 0.75. So anytime I'm above that, I'm a happy guy. So was able to do well on premium calls, made 57% of my income for the month off of those. The dividends, another 13.5. It's just working exactly how one would want an options wheel to go. As always, I hope things go well for you. Hope you have happy investing. And remember, your life has options.